morning, everybody. This is Bill Feely with MSATP TV. And this morning, joining us, we have Jerry Lotz with Cost Segregations. Um, they've been a corporate sponsor of the Society for quite a long time, and we look forward to gathering some information from Jerry this morning. So, Jerry, why don't you tell us about cost segregation and Jerry Lotz?
Good morning, Bill and MSATP friends out there. I'm Jerry Lotz. My company is CostSeg Energy Solutions. And a little bit about me. I'm a Baltimore native. I did a lot of traveling in a previous life when I was in medical sales and spent a little over 30 years in that career, but always wanted to work on my own. Always wanted to do something for myself because while I really enjoyed what I did in the medical sector and met some great people, it was frustrating oftentimes to get to a point and say, well, I think this will work, and let's try this, and let's try this. And a lot of times it was, well, that's not in the long-term plan, or we don't have the budget for that. So now I don't have to worry about that. I 5 years ago or so made the decision that if I'm going to do something on my own, now's the time to do it. But I'm not going to do it unless I can work with what I would consider best-in-class companies. So at this point, I've put together a portfolio of about 4 companies really that I represent. The cost segregation piece of what I do encompasses the lion's share of everything that I do. And the other ones are also built around savings initiatives for businesses and for consumers. So, as far as the cost segregation work that I do, when I first heard about the concept of cost segregation, I was just floored that something like that actually existed. That somebody that it was okay in the tax law to take a building, say $1 million building, and according to tax code depreciates over a 39-year timeline. So the owner of that building, for a round number's sake, is writing off $25,000 every year in a straight line depreciation method for the next 39, 40 years. But to be able to come along and identify pieces of that property that can be reclassified, and the acceleration on those depreciation dollars can lead to increased deductions, which offset the income, so the owner pays significantly less money. So that's what we do. So the company that I represent, Cost Segregation Services Incorporated, is based out of Baton Rouge, Louisiana. They've been around, 20 years, and have helped 23,000 plus properties across every state in the country since their inception. There are about 35 or so folks that work down there. Anything from engineers, data analysts. There's some sales and marketing groups, project coordinators. But I tell you, they are just the salt of the earth. They will go to the wall for me and any of my clients. I can sleep at night knowing that they're going to take a look at that tax code, go up to the line with it and look over it. But I know and I'm confident that they will never cross the line there. So they really, really do what they say they're going to do. And the whole idea of identifying assets in a building that can be put into a 5, 7, or 15-year class life and taking them out of that 39-year class life is just amazing. And the current tax law situation, Bill, cannot be any more friendly to people and companies that have buildings, even those that are leasing space and spend a couple $100,000 or more of their own money to improve that space. We've done studies for the most recent one I did was for an optometrist in Raleigh, North Carolina. They leased space in a beautiful, pristine, brand new strip center. The landlord gave them $100,000 to outfit that space. but they really wanted to do some state of the art things with that space. So they spent another 220,000 of their own money in addition to the 100,000 that the landlord gave. So we came in and reclassified the $220,000 of their own money that they spent, and got them some very nice tax savings.
That's awesome.
So
Now, what do they basically go in and do an engineering study and figure out what the different class property is within the building?
so yeah, exactly, Bill. If I can dig a little deeper and explain the process, how
Sure,
we do
please
that.
do.
So I always say whether a building is newly bought, newly built, even if the client's owned it for a number of years, it is still oftentimes worth us preparing a free estimate of tax savings. So we would prepare an estimate. If it's a building that somebody's owned for a number of years, we will request a depreciation schedule that's been kept on that property. Look at that. There may be opportunities for some tax savings right in that depreciation schedule. Then we would prepare an estimate for what we feel we can find in that building, whether it's something that's been owned for a while. If it's something that's been newly bought, we can prepare an estimate. Maybe there was an offering memorandum, or maybe just a brief description. Somebody bought a million two small office building somewhere. It was 10,000 square feet, 2 floors, and they bought it in January of 2021. Then we would prepare an estimate just based on that, because our databases back in Baton Rouge, having done 23,000 plus properties, are pretty robust. So we can take a basic description of what that building is, match it up to some previous studies that we've done for similar types of properties, and come back with a pretty good estimate of what we feel we can save that client. And
Okay.
that estimate also includes our costs to do the work.
Uh huh.
So our cost to do the work, of course, is also a deduction for that client.
Sure.
Oftentimes, most of our estimates will come back with the return on investment. So we will look at our net after tax cost to do that work and match it up against the projected tax savings. And it's usually anywhere from 5 to 1, upwards of 100 to 1, depending on the type of
Wow.
product that's involved. So once the client signs off on us doing the work, then we would collect the deposit, which is half the cost of the study, up
Uh huh.
front, and then they would sign that engagement letter. That information, the deposit and the engagement letter, goes to home office, and they officially engage that project. So once that project is officially engaged, then we begin with the building owner and the tax professional collecting any pertinent documents to the building. And usually it's
Okay.
the building owner or maybe their property manager or whatever that would have things like maybe there was an appraisal done, or maybe there was a building inspection done. Maybe there are invoices from improvements that they've done over the years. Maybe there
Hmm.
are tax assessments that were done, or architectural drawings, a host of any type of hard asset or hard document that that building owner may have. We will take anything and everything that they have, because it's all useful for our engineering study. Then someone physically goes to the property and does a tour and a site visit inside and out of that property. And if it's at all geographically possible, I love to do that myself, because a lot of times it really gets me, face to face with the owner of the property, an
Right.
opportunity to ask some questions. Maybe there's a piece of information that that owner can tell me about a specific asset in that property that, just looking at it and visualizing it, I may have never picked up, or another site survey may have never picked up. We did a
Sure.
study, a case in point. We did a study for a client that had a a large building. It was an office building being converted to another use in Boston, and our folks were up there, and we had the privilege of walking around with the site manager or site superintendent. And as they're walking around, they're looking around, and it's just a beautiful, ornate building. And the site superintendent just happens to say, it's a darn shame that somebody came in and painted that mahogany crown molding that's up there. Without having that conversation, our site surveyor would have never known that that was actually mahogany and not some cheap wallboard that was configured to be crown molding. So the
Sure.
dollar amount of that particular asset just went to the roof.
Sure.
So once our engineers and analysts have all that documentation, once they have the site visit photographs, and that could be anywhere from 80 photographs. I've taken as much as 500 or 600 photographs of a particular piece of property, depending on the extent. Once they have all that information and the building basis, the dollar value of just that building alone is confirmed, then that study moves into what we call the formal engineering phase. That engineering phase during tax season, like right now, could easily take 7, maybe 8 weeks. Off tax season, like summertime, it may be done in 4 to 6 weeks. So,
Okay.
and it's interesting to learn that when we do the estimate of the project, the folks that do the estimate never communicate with the engineers who are actually studying the building. So it's not like, a study goes to the engineering phase and they can say, well, gosh, the people estimated $100,000 worth of extra deductions. The engineers don't know that when they go into that phase. So it's completely non-biased all the way through.
Okay.
And not only one group of engineers handles that. So it'll go before a group of engineers to look at that. Then it'll go into that same study moves to a second group for a double check. Then it goes to the quality assurance sector before those final cost report numbers are issued. The cost report numbers are what the tax professional uses to create that depreciation schedule. And Bill, a lot of times we work with tax professionals that, maybe this is their first encounter with a cost segregation study. So, we've got CPAs on staff, and our administrative folks are just super knowledgeable about coaching up tax professionals or answering any types of questions they may have about the application of these numbers. And any, maybe there's a 3115 change of accounting method that has to come into play or whatever. So, we are super client focused, and it's just, I love what I do. I love educating building owners and tax professionals. I really miss the times when I could spend 25 days or so live with your group. Met a lot of super nice people. Anything from the folks on your staff down to the attendees that make the conference. It's just a beautiful experience.
Yes, it is. Now, let me ask you a question. Let's just say we have a 2-story building that's got an elevator. That elevator is part of the sale of the building. So that would be real property looking at that. You do your study and you break out that elevator and make that personal property. Now, does that come off of the real estate tax assessment and then go over to the personal property tax assessment? Or does it stay on with the real estate?
So the elevator would fall into, I believe elevators are typically considered a little bit outside of that personal property.
Oh, okay.
Yeah.
Oh, yeah. I was just trying to use it as for example.
No. That's fine. That's fine. But certainly things like carpets, cabinets, countertops are moved into what would be the personal property and an accelerated category. So,
okay.
the neat thing about the Tax Cut and Jobs Act, it took those assets that we can find in the 5, 7, and 15-year class life and allowed for 100% bonus depreciation.
Right, exactly. And the benefit of that is you don't have to pick it up as income when you go and sell it. You don't have to recapture that depreciation. So that made it even better.
It's an amazing benefit. The combination of three tax laws, really, the Tangible Property Regs 2014, Tax Cut and Jobs Act, and even the CARES Act, most recently, really just lit a fire under building owners and tax professionals regarding the amazing positive implications of doing a cost segregation study.
Sure. Well, that's great. Um, is there anything else that you can think of that you would want to tell us about the cost segregation, so that our members know what to do to get in touch with you? What should they be looking for? Um,
That's a great
you know,
question.
when you were saying about like people who have previously purchased their building, is there like a time period where you can only go back like 3 years or something like that because of amended returns and statute of limitation issues? I mean, fill me in on that.
They're all good questions, Bill. And let me start by saying, if somebody has a building that they've purchased, we typically say that if somebody's going to buy a building this year and sell it next year or the year after, a year or 2 or 3 years after they buy it, their bang for their buck is not going to be that great in employing our services as it would
Okay.
be if they're going to hold it for 3 years or longer. So
Okay.
somebody holding it for longer, and quite honestly, we've gone back, clients that have bought buildings 20, 25 years and have had them for that long, but have made improvements along the way. We can still find value in those scenarios.
Okay.
Obviously, the best time to employ our services is for when somebody first buys a building, because we can get, and if they're going to hold it for a number of years, because that we can
Sure.
get the maximum depreciation right up front, and they're going to enjoy that for over the long term. But a lot of times people will have buildings that they bought in 2010, 2012, 13, and they may have correctly entered something into their depreciation schedule as a capitalized entry, but now with
Uh-huh.
the tangible property regulations, some of those entries may now be able to be expensed because the TPRs say that you really need to go and scrub a depreciation schedule now. And if the IRS actually, if they come in and scrub a depreciation schedule and find entries or assets there that may have been entered correctly back in 2010 or 12, with the tangible property regulation changes, are now not correctly entered, they can go and disallow that owner from taking those deductions going forward. So it really behooves tax professionals and building owners to have somebody scrub those depreciation schedules. And we do that all day long as a benefit for our clients at no charge to, when we're preparing these estimates. So,
Sure. Okay.
and then the Tax Cut and Jobs Act, where they take 5, 7, and 15-year assets and get 100% bonus depreciation. I oftentimes go back to a study that I did for a gentleman that owned 10 Dunkin' Donut properties a year ago, and decided to build another one that same year. So he's looking at an income of about $800,000 and scratching his head, figuring, how am I going to come up with deductions to offset this $800,000 income? He spends $1.2 million in the building and constructing of the parking lot, the driveways, canopies, drive-through entrances, beautiful signage, state-of-the-art interior. Out of that $1.2 million, we found $600,000 worth of assets that he could write off that first year. So now he's not
Wow.
paying taxes on 800,000. He's only paying taxes on 200,000.
Right. That's great. That's
In,
huge savings.
incredible. And our cost to do that study was under $6,000. So,
Okay.
and that's also a deduction. So in real money, he gives us $4,000, and we find an extra 600,000 in deductions, which saves him about a couple $100,000 in stroking a check to the IRS.
Right. Wow, that's great. Is there anything else that you want to talk to us about today?
Bill, I guess overall, it does my heart good to work with tax professionals, and building owners, and share things that they may not have known existed. I
Mm-hmm.
worked for a boss one time that turned around from his whiteboard and said, "You don't know what you don't know." And I swear that is so important, so mindful today and every day. And unless we run numbers on a project, we really don't know what we don't know. And there's a lot of misconceptions. Some people think, gosh, if I've been doing a tax return for this building for 5 years this way, now all of a sudden I've got to refile 5 years worth of tax returns. And that's not true. There's a change of accounting method, 3115 form that we complete. And then there's a simple filing of a 481A adjustment. So there's no refiling of taxes. Just because a client goes and does a cost segregation study does not mean that that client's going to get audited. The IRS loves clients that do cost segregation studies because they know that an engineering-based method has been used to apply correctly the numbers that are on that depreciation schedule.
Sure.
So,
One other question. Does it help when you're trying to sell your building to have a cost study done before you sell it so that you can pass that information along to the new owner to help entice, make the selling price good?
That's an interesting point. Certainly, well, what will happen is the cost segregation study. So if somebody buys a building today and sells it 5 years from now, we will
Right.
evaluate that building as it is today.
Right.
So, but there's another portion of that study that has replacement cost values in it too. So we value the building as it stands today and then put a value on the costs to replace those major building components.
Mm-hmm.
So if somebody buys a building today for $1 million and we do a study, they turn around and sell it in 2026. That building's likely going to be worth more than that $1 million.
Right.
When they go ahead and sell it. But we've had a number of clients that when they get ready to sell a building, they will ask us to provide an estimate of tax savings. So we'll provide an estimate based on that number that we threw out there. They bought it today for $1 million, and in 5 years it's worth, $1.3 million. We'll provide an estimate of tax savings of $1.3 million that when that new owner buys it for that amount, they can go ahead and engage our studies, and in that first year recoup X amount of dollars worth of tax savings for themselves. So that number of what that new owner can potentially accrue by engaging our services, that number can actually become a bargaining chip for the old owner and the new owner.
Right. I guess what I was thinking is somebody's owned a building for 25, 30 years and they're looking at retiring and selling the building and their business. Would it behoove them to have a cost study done before they sell the building, even though they're not getting any back benefit because it's fully depreciated, to help with the new owner so that he looks at it and says, oh, if I can get these kind of write-offs up front, instead of it being worth $1 million, it's worth $1.2 million now to me because I'm going to get these write-offs.
Yes,
or doesn't it work that way?
Well, it would be of benefit in the fact that, well, first off, we couldn't study until the new owner took over, but having that estimate of tax savings for the new owner certainly would be a
Right.
catalyst in saying, look, and when you buy this building, you can potentially enjoy extra deductions of 150 or 300,000. So
Right.
the new owner
Sure.
looks at that, and it just makes the saleability of makes that purchase more enticing.
Right. Exactly. That's what I was looking at.
Yeah, yeah, it definitely sweetens the pot.
Right. That's what I'm thinking.
Yeah,
Okay. Um, why don't you tell us how we can get in touch with you
sure.
if we have a client or somebody that needs to have a cost study done?
Well, because I'm a corporate sponsor for the society, my contact information, I believe, is at the bottom of that homepage of the society's website.
It is.
I'm local and certainly can be reached by cell phone, which is area code 410-960-8269. My email address is jlotz, Lotz, at CostSegges.com. My website, www.costseges.com as well. And because
All
I'm
right.
local in Maryland, does not preclude me from helping a tax professional or a building owner anywhere in the country. So I can work anywhere in the country.
Okay. Very good. Well, Jerry, I appreciate you taking your time today to spend it with us. Um, we look forward to seeing you again at our live events. And as far as I know, our next live event is we're looking at the convention in Ocean City.
Wow.
That'll be the first part of June. So we're excited to be back to live events, and hopefully we'll see you there.
Very
Thank
good.
you very much.
It's been a
Have a
pleasure.
good day.
Always a pleasure. Enjoy. Thank you all. I know.
Bye.